Welcome to TechnoFund Stocks. We are not SEBI registered advisors. Please do your own research before investing. So this is the NSE voice and volume data, which we get from the NSE websites. We do the technical analysis basis volume and delivery of the stocks. So these are the three stocks which we've got. We'll TIMESGTY, VARDHACRLC and RACE. TIMESGTY, it has current market price of 181 rupees, market cap of 163 crores. Stock P looks like 70, which is quite high, while the industry P is only. It is an NBFC of type 1 category. Company looks like serving the Times Group, which is Bennett Coleman and Company. So services provided looks like retail and corporate lending, merchant banking, money market activities, portfolio management, investment and trading in equities. EBIT is quite low, which is just 3 crores against a market cap of 163. Looks like it is quite overvalued with low ROCE and ROE. I prefer ROCE with at least 15%. Pledge of shares is nil. So while this does not look like a company I would like to invest in, the company is almost debt free. Stock is trading at 3.42 the book value. In NBFCs or financial sector, we look at the book value. The quarterly results, while it has improved from March to March, but the margins remain in the same range. Net profit has increased from 0.39 to 0.72, and earning point share has also increased on quarter to quarter basis. Net profit is increased from 0.39 crores to 0.72 crores. P&L on annual basis. So comparing, there seems to be a decline in 5 years. Balance sheet, the equity remains constant. Earning per share has declined from in past 5 years, 6.55 to 2.35 is the PAT. Shareholding appears to be constant with 74.92% with the promoters. FII has increased its shareholding. Overall, I don't find this to be a stock worthy. Going to Vardhaman Acrylics. This company has a current market price of 52.1 rupees, market cap of 419. ROCE again appears to be low. The company is a manufacturer and supplier of acrylic fiber. The EBIT is 13.2, better than the last company, but still appears to be low. Stock PE is 45, while the industry looks at 26. So Val holds 90% of the total operational capacity in the domestic market. A subsidiary of Vardhaman Textiles, which holds around 70%. The company is reducing debt, is almost debt free. So industry PE, as I said, is around 27. Quarterly, the company has remained stable. In June, it has performed better than last year. The recent results are out, but the margins are subdued. In fact, it is reporting losses, which is a red flag. Does not appear to be a company which I'll be looking further, unless there is some story which is yet to be seen. Cash flow from operating activities has also declined in 2 years, while it has increased from last year. The investments in the fixed assets also does not appear to be high, so no new capex in the company. Looks like there is only 5 crores invested in the previous year. So, but there is some investments of 339. However, it has also sold 334 crores from last year, unless this 339 is in some subsidiary or a new company, which would increase in the overall consolidate financials of the company. This again does not seem to be very promising, so we'll look at this investment. The inventory days have remained stable, but is quite high, which is close to 5 months. Promoters holding again is stable. FII's holding is also stable. We just have to see if that investments was something. The financial report for the latest year is not out yet. As can be seen, investments in the previous year were 169 crores, which is in cash and equivalents. So could be in mutual funds or liquid bank balances. Oh, 169 and 186. This appears again to be a cash item only, so we'll not be investing. So Race Eco Chain, our third company coming in the trigger. This is mainly into recycling with 422 crores of market cap, 245 rupees current market price. ROCE is 10%. Stock PE is very high at 109, where the industry PE is around 26. So the company is into aggregates plastic wastes and produces recycled products, thus reducing carbon footprint. They've developed an AI powered blockchain, so this is what everyone is using these days to make it sound like a company of the future. The company is into waste management, biomass briquettes, and recycled products. Waste management, the company procures waste and converts into useful products. The company produces fabric bags from PET. Product profile includes bedsheet, comforter, curtains, handbags, quilts, etc. Clientele are big companies: Sun Pharma, Reliance, Mankind, HUL, GSK, Ultrasiments. In the revenue breakup, we can see the sale of recycled products is only 1%, which the company manufactures itself. Sale of waste material is 88%, which is the primary business of the company, with the biomass division contributing 11%. Coming to the EBIT, company has registered 10 crores of EBIT. The company hasn't pledged any share. Promoter holding is at 45%. The company is expected to give good quarter. The company is into waste management. The positive here is that the quarter profit variance is 1245%. It has grown 12 times. Looking at the quarterly result, the March figures vis-a-vis previous year's March, September to September, June to June. So year on year, the company has done better sales with the profitability increase from 1.2 to 1.76. The tax rate was quite high last year, so the PBT would be a better figure to judge, 0.4 to nearly 2. Coming to the annual results, the company has consistently shown an increase in sales, with the margin increasing from 1% to 2%. Earning per share has also increased from 0.8 to 2.25, an almost increase of 3x. With operating activity, operation CFO has decreased mainly on account of increase in receivables of 64 crores, maybe to push the sales as the company is new. The receivables has increased from 55 to 119 crores. Debtors are nearly 3 months. Promoter holding has remained stable in past 3 years. And DII domestic investors appear to be increasing the investments. There are some public investments which are higher than 1%. I see a company, Ganesh Ecosphere, that is also into manufacturing from recycled materials. This looks like a company I would like to analyze further. For more such content, like, comment, and share, and subscribe to our YouTube channel.